Technology stocks are safe for me because on the one hand, the inflationary pressures don't hit them as much, with the wage pressures very muted in that sector, and the growth can sustain any demand destruction due to COVID wave, which we are already anticipating anyway, but it might surpass that August high of about 150,000.
Well, I'll tell you, just looking at the yields, the higher yields had meant that people were afraid of technology. We are seeing lower yields today. That's probably helping technology, hurting the financials, which are off a little bit more. I mean, we'd been looking at the 10-year thinking we were going to hit 1.7% when we were here on Tuesday and Wednesday. Now we're at 1.524%. So these are some very quick moves that come through with it. And I guess, Greg, the real question people are going to be thinking is this a head fake? Is this kind of like the time to buy that we'd been waiting for? Because if you were waiting for things to sell off to buy the dip, you've been sitting and waiting for a very long time.
It depends on where you're buying, right? And so as far as yields go, that's because we're seeing a flight to safety and people are buying. Yeah. Although I do think that if we see an intense wave, it's going to be much more difficult for the Fed to tighten more aggressively next year.
Right.
But I would be buying in places that are immune from those inflationary pressures because we're going to see workers leave the workforce or not come back as quickly, particularly if we have a bigger wave, which is going to cause those wages to keep going up. And we want to see things that can sustain demand through any retrenchment, any larger wave here. And so I'm looking at technology, which, as we saw last year, can sustain demand throughout a wave and doesn't face those inflationary pressures from wages, from materials, from shipping. So enterprise software, where we see lots of margin expansion last year, and I think we'll see it next year, as well as intellectual properties like at Adobe with Creative Cloud and Experience Cloud and Document Cloud that gave us 45% margin. So that is my flight to safety at this point.
Greg, you mentioned at the top of this that you think Europe is going to go into retrenchment on this, that they will deal with lockdowns. I mean, this is an issue of something with South Africa, and some of the African nations are dealing with this. But you think Europe is the only place that they're going to see a lockdown? Is that because they were already kind of on the edge of a lockdown before because of the higher numbers?
Well, let's dimension this because they're at around 390,000 cases a day. Their previous high was 320,000. So they're already significantly above their previous pandemic peak. And so, yes, the situation is certainly very delicate there. But we've already identified this virus in Hong Kong as well. And so I think we would be remiss to think that any region could insulate itself. And if that is true, we will see destruction to manufacturing capacity with closures and with drawbacks. We will see ports close and affect that as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.